Good morning, everyone. Welcome to a busy Wednesday morning. Hope everyone is doing well. It's a beautiful spring day here in Chicago, where many of the panelists are and myself are located. So we have a spring in our step and ready to go. So as you guys are getting settled, I'll go through some just initial agenda items. Welcome to today's seminar and conversation, where we're going to be talking about cryptocurrency and some of the effects that it has had and will continue to have with financial institutions in the banking industry. From reviewing the attendee list and those who have signed up, it was great to see so many familiar names and great to see some new names. So for those who don't know me, my name is Rob Fleetwood. I am the co-chair of the Financial Institutions Group at Barrick Ferrazzano. We're a law firm headquartered in Chicago. We have a significant financial institution practice and represent probably 300 or so banks throughout the United States. And I will be moderating today's panel. And I'm very excited to have the folks that we have on board. So before we get to formal introductions, and let them talk about their unique perspectives and what they're doing in the space, I do just briefly want to mention that we have Stan Orzula, who's a partner of mine at Barrick, who deals with a number of legal issues involving crypto and what banks are looking at. Michael Bush, who is president and CEO of Burling Bank, which is a leader and developer in a lot of the crypto issues, particularly in Illinois here. Jay Schulman, who is with RSM and serves as a consultant and heads up their blockchain and digital asset group, as well as Peter Stern, who's with CF Benchmark, who is probably the most tied into the actual industry. And I will let him describe what CF Benchmark does and what he does, because he can certainly describe it better than I can. But why are we here? Been an interesting year, obviously. Who thought 5 years ago that all the chatter about Bitcoin would have you guys taking an hour out of your day to see what's going on in the market and what is crypto, how is it affecting people, why do you need to know about it? But here we are. And part of it may be because of the pandemic and people staying at home and watching CNBC and seeing the ticker all the time about what's been going on. And part of it is just that it's been an incredibly innovative space, and more products are being introduced and more people are accepting the fact that crypto is real. And that's what kind of a light bulb went off in my head. We've been dealing with crypto issues in the financial industry, for the past year or two of kind of one-off type questions. And Stan's been doing a lot of that consulting and counseling. And at the beginning of this year, I was sitting around and just kind of digging in a little bit and reading about what was going on in Anchorage with the bank up there and some of the other headlines, and thought that it might be helpful to get a panel like this together and have it specifically targeted toward banks. And was talking to my colleagues about how we could time this. And really mid-April was the only time that worked with people's schedules and with our other conferences and webinars. And I thought, wow, that's way too late. Like, this is January, it's in the headlines. Let's strike while the iron is hot and get people thinking about this and talking about it. Mid-April is tax time. No one's going to want to be thinking about joining a webinar. Well, taxes got delayed a month. At least the filings for last year, you still have to pay estimated tomorrow. And it's still on people's minds. Actually, driving in today, the headline on the radio was that cryptocurrency gets the head seat at the table in the financial world today. And that is because Coinbase, which IPO'd and is going to start trading today on NASDAQ. So it is timely. I think we picked a great time to do this, and hopefully we'll bring a lot of value to you guys as you're listening to us. Two themes to talk about today. We want to talk about, is crypto real? I think everyone on the panel is going to agree that it is. I think it's real. There are debates on how real it is, and it is difficult. It is a difficult concept to grab your arms around and really get comfortable with. So touch on some of those of, is crypto real? How is it gaining acceptance? How can it gain more acceptance, et cetera? And secondly, kind of trying to get across and trying to introduce the idea that in the financial industry space, even if you're at an institution or you serve institutions who aren't going to be dealing with this directly, or you're not going to have direct offerings on this or direct products, it is something that you need to be knowledgeable of. It is a financial instrument, whether you like it or not. And in the industry, you're going to need to be able to answer your clients' questions about it. And you're going to have to understand how, even if you're not going to be directly involved at the beginning, as it gains steam and as it increases its acceptance, your hand's going to be forced at some point where you're going to have to come to terms with it as either a payment system or storing value, having clients want to invest in it, those types of things. So those are the two primary issues that we're going to try to focus on and answer some of your questions. So if I go much longer, my introduction is going to turn into a conclusion. So I want to just do a little bit of housekeeping, and then we'll kick it over to the panel here. Today is intended to be a roundtable discussion. We do not have heavy slides. All of us are happy to provide you with slides. We've got pretty pictures. We've got diagrams of how blockchain works and all of that. That's not the intent of this. We're trying to make it more conversational and answer the questions that you have. Questions is key. I know that everyone has to have at least one question about crypto. It could be, what is crypto? What is Dogecoin? What is blockchain? Whatever your question is, do not hesitate to ask it. We will try to answer it the best that we can. If we can't do it on this call or a conversation, we can certainly follow up. The way to do that, you should have a little question box down on the bottom of Zoom. We'll be monitoring that. And again, please ask your questions and we'll do the best that we can to get them answered. So without further delay on my part, let's turn it over. I think it would be helpful if everyone kind of gives a little bit of an intro, giving their idea of what they're doing in the space, their perspective, and that will set up some of the conversations that we'll have in a moment. So I'll kick it over to my partner, Stan. Stan, if you can go ahead, introduce yourself and some thoughts on the area and what you've been doing.
Thank you, Rob. My name is Stan Orzula. I'm a partner here at Barrick Verrazzano, and I'm actually on my 6th year here. Prior to joining Barrick, I was in-house at the FDIC. And at Barrick, my practice focuses mainly on new products and technologies and developments for banks. And this includes fintech, banking as a service, and I'd like to call it from cradle to the grave, from a bank discussing partnering with a fintech, whether it's in crypto or banking as a service, navigating them through regulatory approvals and counseling, and then dealing with examinations and operational issues, and even terminating or moving on or transitioning from certain relationships. In the crypto area, it's been really busy for us, especially in the last, I would say, 18 months. And what we focus on in the crypto area are that banks that are interested in maintaining custody of cryptocurrency or digital assets, which I think are interchangeable, investments in cryptocurrency, using cryptocurrency as collateral, as well as sponsoring and using cryptocurrency ATMs, which have actually, there's been a big rise in them. And I can't take credit for this. One of our other partners did it, who isn't here, John Geringer, in today's discussion, but he actually did the first crypto or Bitcoin ATM and helped get it approved by the IDFPR probably about 6-7 years ago, which I think is interesting. But it's definitely an area that's growing, especially with what's going on in Illinois and the bank and the special purpose depository institution in Wyoming. So it's really a new area and a growing area for banks.
Oh, go ahead. Next, Michael Bush from Burling Bank. We're located in the Chicago Board of Trade building. Been around for about 31 years, 200 million in assets, and we're state chartered, non-Fed member with the FDIC as our primary regulator. So we're relatively small, and certainly compared to our next door neighbor, which is the largest bank in the world, the Fed. But you know, as you look down LaSalle Street and see a lot of the flags and banners, we are truly a community bank, both in, I guess, approach and also size. And so remaining relevant to your community is important to you. And that's really kind of how we were led into providing plain vanilla banking services, but to crypto related firms, because we're a little bit niche in that we have a lot of trading clients in our stable of clients. And obviously we know that that industry has changed dramatically in the last 10 years with the adoption of algorithmic trading. So it's an opportunity for Burling to remain relevant to those customers that, like trading corn futures or bond futures, wanted to trade cryptocurrencies and do the arbitrage between that pricing dislocation on different places that they could trade in, or over the counter trades. I myself am also a former trader for 20 years. So we maybe didn't have some of those same trepidations that a bank that's not familiar with that community at all would have. But we also, from an AML KYC standpoint, we're very comfortable knowing that, you know, there might be a negative that we have to prove, but we know these clients, and we're not out there to launder money or or trading crypto for nefarious reasons, which I think was kind of the first perception from a regulatory standpoint, and people who weren't really informed about it, was that it had to be for nefarious reasons from a use case. Well, that's, you know, kind of a very 2017 to 2018 view. And then the more recent concern has been more around security and hackings and those sorts of things. But happy as we go through this this panel discussion to talk about our journey and how we got our board comfortable with it, making sure internally how we could handle the requisite compliance work that came along with it, and also how we socialized it with the regulators, because as we all know, the pace of innovation is far outstripping the pace of regulation, especially in the blockchain cryptocurrency area. And so that's where it gets a little bit difficult, because you don't want to get too far ahead of your regulators when it comes to that. And that's one of the reasons too, which we can talk about later, potentially if there's time, about the efforts, at least here in Illinois, to put in some legislation to put that into law and have these, you know, guardrails around the compliance and what you can and cannot do in the special purpose trust charter, and how I think that maybe protects a bank's positioning and in priority as far as being able to offer those goods and services. But certainly happy to go through all those things on how we came about it and what we see going forward in the market at the appropriate time.
No, that's great, Michael, and looking forward to hearing kind of the boots on the ground, being the banker on the panel, on what you're seeing on a day-to-day and how you've gotten stuff implemented. Kick it over to Jay with RSM.
Hey, thank you. So Jay Schulman, I lead our blockchain and digital asset practice across audit, tax, and consulting here at RSM, and have been spending a lot of time over the past 4 or 5 years helping clients across the financial services spectrum. So as Michael talked about, early on in the trading space with proprietary traders. And you know, it's kind of an interesting phenomena that Chicago being a hub of commodities traders, it was the commodities traders that first really started to get interested in Bitcoin and some of these other digital assets. Since then, have spent a lot of time helping all different types of entities, whether that's fintechs or banks, get into compliance and be able to offer the right products and services in the marketplace. For a long time, that was in the money transmitter license space. And then more recently, with the opening up of the guidelines at the OCC, both helping some of our clients that are fintechs get a bank charter, and helping some of our banking clients with an OCC bank charter to go and add digital assets and Bitcoin in particular as one of the products and services that they offer to their clients. We're also seeing, because the OCC is more friendly to digital assets than some of the state charters, that there are state chartered banks that are converting to OCC chartered banks specifically to be able to offer these types of services. I think, Robert, you said that Bitcoin is a financial instrument. I sit on the AICPA working group for the auditing and accounting of digital assets. At the AICPA level, we don't call them financial instruments, and that creates a challenge when you think about doing your books from an audit and accounting perspective. They're indefinitely lived intangibles. So a little nuance there. That does mean that if you were to enter this space, you do have to think about what that does to your financial statements. Likewise, these are taxed not as cash, so to speak. They're taxed as property, like a house. So standard short-term and long-term capital gains. And if the bank were to offer these assets, there's some tax reporting components that are important to follow through here too. And I think to kind of close it out, it's an interesting place right now over the past 6 months, and I would guess in the next 6 months as well, as we see the OCC, the SEC, FINRA, FinCEN especially. I think Michael talked about the KYC, AML components. All of these regulators kind of refining how we as regulated financial services entities should operate in this space. And I think that while not everybody likes every individual guideline, the more clarity we get in general, the more this ecosystem will mature. And I think, like all the panelists have said, the more pressure it will put on banks to be able to offer products and services in this area. So thank you.
Yeah, thank you, Jay. And that won't be my only misstatement today, I'm sure. So that's why we've got why we have you guys here. So thank you for that. I'll kick it over to Peter now, who's with CF Benchmark.
Thanks, Robert. Yeah, and thanks for everyone for taking the time. So I run sales and client relations for CF Benchmarks, Kraken, which CF Benchmarks is a regulated benchmark provider. We are fully owned by Kraken, for those that know, the very large crypto exchange. And we are based out of London, and we are regulated by the FCA in London. The easiest way to describe our business is if you think of S&P Dow Jones, FTSE Russell, MSCI, we are the crypto version of that. So our job is to provide accurate pricing and data for financial regulated products, as well as different types of vehicles just kind of in the more regulated space. For those based in Chicago, you probably know our largest client that you'll know is the Chicago Mercantile Exchange. We provide the data, pricing, valuation, the kind of inner workings for their products, for their Bitcoin futures and options, as well as we just launching Ether as well. And also for the, if you think of the banks and as the US and wealth management practice is trying to find a easy, more regulated way for clients to access crypto. We're working with a lot of the US firms and the SEC to potentially launch a Bitcoin ETF. So we have a few people, we have 3 out of the 8 that we've filed with and working with, as well as we had the second launched ETF in Canada with the Ontario Securities Commission, as well as we just worked with Brazil to get the first publicly listed ETF there. So our job, and I come from traditional financial services. I've been in crypto for over 3 years, but I worked in traditional finance before with institutional clients. So CF Benchmark's kind of main job is to bridge the gap between the regulators and the crypto native community. A lot of people don't want regulation and think that Bitcoin and all the other cryptocurrencies are potentially going to take over the dollar as well as other currencies, where our job is to kind of bring people down to earth and make it available for people to actually invest in an appropriate way and make, bank advisors, wealth, family offices, RIAs, everyone, pretty much institutions find a clear regulated way to invest in the space and understand it better.
That's great, Peter. And when I first met Peter and talked to him, I think you commented to me that 4 or 5 years ago, you were a little anti-crypto or skeptical, maybe not anti, but certainly skeptical. And again, now you're spending your full days dealing with it. So certainly interesting on that front. Ryan, if you can advance to the next slide, and we'll start our discussion here. And maybe we start by picking up where kind of Peter left off in terms of trading and trying to make these things accessible to everyone, and to build some real quality behind the valuations and certainty behind that. Maybe before we do that, Peter, if you can just touch on, for the audience here, kind of what are we actually talking about? I know people know or have heard of Bitcoin. I don't know if we need to get into the basics or kind of talk about blockchain and all of that kind of stuff. I think we have to assume, let's just assume blockchain works. We can sit and take a course on the intricacies of it. But maybe just some very basic, what are we talking about? How, coins, are they real? I know people quote unquote mine them. Just some basics, how many are there, kind of what you're seeing out there to kind of set the framework, and then we can move on to the trading platforms and how people can actually buy them.
Yeah, of course. And thanks again, Rob. So if you look at the whole landscape, there's over 4,000 cryptocurrencies out there. There's probably over 6,000 to be honest, but as well as there's hundreds of exchanges that they do trade on. And a lot of them are domiciled all over the country, which makes it a little bit difficult for AMCKOL, like just to understand the actual operations and regulatory aspect of that. So, when I started and when I was a huge skeptic on it, I didn't know how to value it. It was, it's not the same as equities, fixed income. Cryptos don't pay a dividend. They don't have yield. So it's definitely hard to understand. And just to be clear, people, if you don't understand a lot about it, you're not behind. Some of the largest institutions that I speak to, global institutions, they don't understand it at all. And I think a lot of them have not taken the time to understand it or been scared. So their answer to it is, well, it's garbage. It's for money launderers, it's for still, but just more that they haven't taken the time to actually try to understand it for their clients, where I think that it's evolving to the sense that if you still don't believe in it, at least have an answer why you don't believe in it. But it's hard to understand because there is so many different coins out there. If you look at the top ones, Bitcoin, Ether, Ripple, Litecoin, there really is, those are the top ones. There's, after you get beyond coin 20 or so, they become a lot less liquid. So Bitcoin's been around for over 10 years, is why people truly believe in it. It has such a big backing and following. It's, when people look at how you value Bitcoin, a lot of it is because they have a huge community. It's been around for so long and so many people own it. Where it's become more mainstream is because you see Paul Tudor Jones, you see Fidelity launching 100-person operations, trading desk, custody, Gemini. A lot of these people are getting insurance through, Aon, through Marsh. They're actually, their custodial business has insurance, which was a huge issue just a year ago. So it's, most of them, trade on these exchanges. Prior to myself working at CF Benchmarks, I worked at Bitwise Asset Management based out of San Francisco, which pioneered the first S&P 500 of crypto. So top 10 coins. That fund is over a billion, or in AUM, over $1 billion now. But 3 years ago, people did not want to talk about, they didn't understand anything beyond Bitcoin at all. And what the reality is, because there wasn't clear understanding, there wasn't regulation, and coins get launched every day. So as if your bank or anyone has a wealth management arm, clients come in and ask you about coin 485. I can't tell you what coin, past coin 100 is off the top of my head just at this moment, but that's really, and I think it ties into with a lot of people understand blockchain somewhat, and blockchain works, and Jay can touch more on that, but it's really understanding, Bitcoin is, as I say, gold 2.0. It's digital gold. They become digital, they're digital assets, digital currencies. But in terms of the trading and kind of what Bitwise pioneered initially with dealing with the SEC was, out of these 200, 300, 400 exchanges, there is essentially 10 that are very legitimate. CF Benchmarks, we've labeled it down to 5. When we report pricing in for Bitcoin, Ether, we pull from 5 that we believe that have the right measures. We have surveillance agreements with them, stuff that I believe bridge the gaps with regulation that should allow clients to be more comfortable owning it, or people recommending it, or trading or understanding it, as well as the payment systems. And Bitcoin is the biggest. It's a store of value. It's digital gold, like I said, where a lot of these other ones, and this is again something that I'll let Jay touch on, but the blockchain Bitcoin, people expect it to, you go in and buy Starbucks. I can go next to my condo in Chicago and buy Starbucks. It's not meant for that. Where a lot of the other cryptocurrencies, the blockchains that they operate on, they're much faster. So Bitcoin is slower, and it's meant to be more of an investment. The other ones as well, people buy and hold them. A lot of people at Kraken that are much more crypto native believe in that, but we've got to the level where people used to say blockchain versus Bitcoin. In my opinion, it's all become one. It's just understanding, each cryptocurrency, as well as they're skeptical assets, and they do have a lot of risk and volatility. So that's one thing that I think we've evolved, and there's been so many institutional players within the US as well as globally that have accepted that digital assets, or a lot of the top ones, are here to stay. So it's more just educating and understanding how they trade, the regulation, tax, things that really manage to your end clients. So I'll let Jay too chime in here. Just on
thanks.
blockchain.
And I think we need to narrow, if we're talking about what a bank, a regulated entity, should be thinking about. And I think that's the big difference of the news of the day with Coinbase going public. Coinbase is not a bank. They are not a traditionally regulated entity. And so when we look at how the regulations have been built here, there are a set of cryptocurrencies that are commodities that are regulated by the CFTC. That is Bitcoin, that is Ether, and some of their derivatives. That's it. And so when you look at, and I'll give a good Chicago answer here, ErisX is a CFTC regulated DCO, designated clearing organization by the CFTC, and they are limited to only working in those core regulated cryptocurrencies. So when we look at what a bank should be operating in, yeah, there's the 6,000 nonsensical stuff out there. But from a regulatory perspective, you should stick with really, those couple that are regulated by the CFTC. The SEC, and I'm sure you're familiar with the Howey test, has the Howey test that says whether it's a security or not a security. But as of yet, very few of those other 6,000 have really indicated what they are. Most of them probably argue that they're not securities, and the SEC hasn't kind of caught up to what is and what isn't, which poses a challenge for an OCC or FDIC regulated bank to be working in some of those. And you saw that play out with a cryptocurrency called Ripple, where the SEC came in and sued Ripple. And in effect, all of those exchanges, Coinbase included, Kraken, I believe, included as well, had to take that off of their platform. That's not a position that a bank should be operating in. So when we talk about playing in this space, really, I would even narrow it down, probably one to start, right? Bitcoin, like you said, Peter, is the one that everybody talks about. If you want to enter the space, enter with one. But really, it's safe to stick with two, Bitcoin and Ether, and those are the two to be focused on.
Yeah, I mean, I would fully agree. Like and that's why we're working so heavily with the SEC to get a product launch with them, an ETF that people are comfortable investing in, as well. I don't think most traditional financial institutions really need to go past Ether. I think that I agree with Jay that's and the SEC is having enough trouble wrapping their heads around Bitcoin. I think that they're getting there, but from a regulated entity, when you're talking about a bank, that Bitcoin, Ether as well, because of the products that they have launched at this Chicago Mercantile Exchange that we've helped them, it just makes things easier from a more regulated base to make clients comfortable, as well as the bank or entity that's potentially offering or structuring something around that.
So real quick, before we get kind of moving on to what banks are doing right now and some of the crypto bank things, One other basic question that I've always or have been struggling with to figure out how kind of it works in my brain is if you go to, if someone goes to Robinhood or goes to some online exchange or portal and buys Ethereum or buys Bitcoin, can you just explain what are they actually buying? You know, we've heard the story of, you know, if you have a coin, you have your code. If you lose your code, you don't have access to the coin, and the billions of dollars of waste that's out there of wasted coins. If you're just a consumer, you have $100 and you go and you throw it in Bitcoin. What does that mean? What are you buying? You're not really buying that ETF because there isn't one yet. So just a real quick, you know, kind of explanation of what actually an individual would be buying.
Yeah, so there, I mean, if you go into Robinhood, Square, PayPal, Coinbase, Kraken, depending on what exchange or online exchange or app you're using, you're going in and you're buying the cryptocurrencies. There's products out there for those that are familiar with Grayscale Investments, New York based. They have a secondary over-the-counter product. My ex-firm Bitwise has a similar product. There are no US-based cryptocurrency ETFs. So when you're going and buying these, you're buying the actual cryptocurrencies, but there is a big security risk for a lot of them, where if you don't necessarily want clients to be going on their own and doing their cryptocurrency trading and storage, because there is security, there is risk. So that's where we work again with a lot of institutions to try to help with operational infrastructure, pricing, ways so that if you do decide to offer those types of services, it's either through a regulated product or you're going through the, you know, professional security and operational kind of setup to be able to protect your clients as well as yourself. Because those are what we've seen over the past 3 years is a lot of clients not telling, you know, the bank, their wealth advisors, whoever it may be, that they're actually owning crypto, and you are subjecting yourself to risk by, if you lose your phone. When I'm from the Midwest, I lived in San Francisco for a year. There's a thing called SIM hacking, which people try to hack your SIM card in a different state and steal your order $500 on Uber Eats, or, you know, try to hack into your Charles Schwab account, and your crypto wallet, your clients are susceptible to that as well. And once that's gone and they've gotten, you know, it's essentially impossible to recover from. So that's where a lot of people think it's great to go buy this, and they hear a friend talking about it, or you know, a colleague, and they go and buy $500 on it's. Yeah, you're not trading as an institutional client, but you're still exposing yourself to risk that can be mitigated through, you know, either waiting and going through a regulated product or having the infrastructure with the bank being able to set that up.
Now that's helpful and certainly illustrates why it's important, I think, for all financial institutions when they're talking to their retail or corporate clients, kind of understand that and can, even if they're not trading in it themselves or having the platform for it, that they steer their clients that way. Kind of moving on to the right half of the slide here, you know, let's talk a little bit, maybe Jay, a little bit about the crypto banks. We have it in quotes there, but you know, there've been a lot of press. There's a Good American Banker article a couple of days ago about Avanti, a bank up in Wyoming. Kraken also has a bank affiliated with Peter's company in Wyoming, and there's Anchorage Bank in Alaska. So we're seeing these crypto banks. You know, internet banks came about 15 years ago, and when you boiled it down, there really wasn't much difference between an internet bank and a traditional bank other than physical locations. You know, is there a big difference between a crypto bank? What do they do? What are they trying to do? And then maybe Michael, kind of segue to you, building off of that of, you know, what is your bank looking at? You know, what is a $200 million asset bank who's not a crypto bank? You know, what are some of the products and pitfalls that you've encountered through your journey in this? So
yeah,
Jay,
and I think you framed it up as a great place to start, is think about, you know, where you were in your evolution of digital banking, mobile apps, online banking capabilities and things like that. Where were you in the evolution of chat capture and be able to do online deposit and things like that. And this is the next evolution of what a bank is going to look like. And I go back to an SEC FINRA guidance from 2019, I believe, that said a good control location for cryptocurrencies is a bank. And so I think that's when you think about what a bank would do in this area, it probably looks a lot more. And I think that's why the OCC charters that are being issued are trust bank charters, because they feel a lot more like a trust bank. It's the custody of these funds. As Peter walked through, there's a lot of security implications of working in the digital asset and cryptocurrency space. And so having a bank custody the funds, especially if you fall under the SEC custody rule, is really advantageous. So I think, this concept, just like you said, of an internet bank way back when, I think that certainly these crypto banks are coming up. I think they will be very successful in the short run, because the products and services haven't kind of rippled through the rest of the banking sector. But and I know we'll get to this question. I'm kind of ruining the question now. In about 5 years, a crypto bank will look like an internet bank, right? It'll just all kind of blend together, and it'll just be one of those products that we have. I think that what we see today is crypto lending. We aren't seeing that yet in the bank model. I'm sure we will coming soon, and a lot of the other functionalities. I think we talk about what the functions are. I think that one of the big kind of disruptors here, I know we talk about payments and buying coffee and things like that, but I think the bigger disruption is actually just the movement of money, wire transfer, SWIFT network. If I need to move $1 million in US dollars in our current banking system, it's going to take about 2 to 3 days to clear that transaction. If I move that same value using a cryptocurrency, it clears in about 5 to 10 minutes. And that, I think, becomes a big factor in why banks will enter this ecosystem, is because of the speed of being able to move that amount of money. And a bank doesn't want to give that up to PayPal, which is certainly very aggressive in this space, Square, which is also aggressive in this space. And so I don't look at this as an offensive measure for banks to be entering this space, although certainly there's some offensive opportunities here. I look at this as defensive. You don't want to give up market share to fintech and payment processors.
Yeah, it's a fascinating, I think, time in this conversation of blockchain and crypto that originally went from trying to disintermediate banks, and you don't need a trusted intermediary for two people to have a transaction. But I think especially as institutional players come in, there's a value add of having a bank association, but also in the way that crypto can remove some of that friction that is too expensive at times and too slow and whatnot. And so I think that's going to be what we will be looked at by traditional banks and also crypto banks. So I do think it's important. I know it's important to the regulators and their attorneys to maintain these distinctions of what is a bank. And so when we throw that name around a lot, a charter bank like Berlin is empowered to do many different things than a special trust charter or something like that. And yet, my kids think Venmo is a bank, and they're not wrong necessarily, even though their dad runs one. But it's the point of interaction for that consumer. And so where is their point of interaction into the financial system, and what services do they need? Maybe everybody doesn't need everything that a Berlin offers. And so it can get more specialized, but that's the threat and the opportunity for the traditional banking world. But certainly our journey is plain vanilla services at the beginning, which I would describe more as facilitation. Somebody's made a trade and they need to send $500,000 via wire from Berlin Bank to Bank X. And so you're just kind of in the background facilitating that money movement, but you still have the AML KYC work to be done to prove that negative that's not for money laundering purposes. The next level, which is what we are actively considering, and in the Silver Gates, most people on this call probably heard of Silvergate in San Diego, Signature in New York. these are banks that have been actively and very robustly serving this marketplace. Silvergate now has lending on crypto. And the bank consideration there is to make sure that you have the custody solution figured out, because you're taking that Bitcoin as collateral. And so what's the custody solution for that? And then also, how do you right size it? Because it's pretty volatile. And so do you have that? Can that be right sized in an automated way? And most banks don't have that on their own tech stack and capabilities to do. And so there are partnership opportunities. But yet a lot of customers would probably rather get a bank loan, knowing that you're a regulated entity and have all these benchmarks that you need to abide by, versus a non-bank that they can go get a loan in. The market's probably also going to be cheaper. And so I think that's potentially a threat for the private lending market that maybe lends in the teens, that is a bank that starts to lend on Bitcoin. Let's say it's 8%, 9% loan. Well, that's kind of a win-win for the bank, as long as you can prove out that custody part and also ability to take out some of that right sizing risk, account for the volatility, because so many of our loans are now at 3, 4, and 5%. And so it's a premium loan with pretty well-known collateral now, but you need to get everybody comfortable with that. And so we're not there yet, I think, as a banking system where the regulators haven't had a lot of exposure to that. But I wouldn't be surprised if you see that very soon, more banks doing that. Lastly, there are some products that are being offered to banks on a white label basis to actually buy and sell cryptocurrency, but through the bank. And so would that give that customer more confidence that they don't need to find an exchange or some other gateway, that instead they went to Berlin's website and you could buy or sell crypto there? We don't provide those services, but that's something to look forward at and study. But certainly for those on the call that aren't involved in it all, most importantly, just educate yourself, inform yourself, as you may have some customers that want to buy or sell Bitcoin, and you want to be aware of that and what the use case is. And that's perfectly legit, but you'll just need to make sure that you have the policies, programs, and procedures in place. Talk to your auditors and compliance people, talk to your attorneys to make sure that you know what services you are providing and what they're doing.
Yeah, Michael,
this is Dan. As part of that, how important is it to, do you think, to educate your regulators, especially considering it seems like the technology is ahead of what the primary banking regulators normally are dealing with?
Yeah, informing them ahead of time is absolutely paramount. This is something that you need to socialize while you're doing the strategy. The regulators, obviously, as you know, don't like surprises. And so, to be very overt in your journey with the regulators on the why, the where, and the when is very important. Also with your board, you have to bring everybody along with you and make sure there's a compelling reason to do that. It's not for every bank, and it may not be compelling enough, but it might be very compelling reason to do it, and can be accretive to your bottom line if done in the right way. But extremely important not to do anything before you advertise that you're going to do it, and can prove that you have the right policies and programs in place that can handle it.
I think two things here. If you're an OCC regulated bank, Beth Knickerbocker, who runs the innovation group of the OCC, would be more than happy to get on the phone and talk through these ideas, like you said, Michael, and socialize. They certainly are seeing a lot of examples. And, if I think about where they were in May of 2020 versus where they are today, just huge leaps and bounds in understanding, all these little nuances. But you were talking about AML and specifically KYC, which I think is a no-brainer for everybody on this call. I think when you enter into crypto, certainly the KYC component is incredibly important, but there's also another added piece, KYT, know your transaction, that the regulators are very focused on. Where did that Bitcoin come from? Yep. And in particular, not just that, if Michael were sending me Bitcoin, we did the KYC. I know it's Michael, but ultimately, did Michael get that from a money launderer or arms dealer or somebody like that? Mm-hmm. And so the expectation when you start to work in these environments is that you need to know the history of that Bitcoin much more. And I'll just point out, not to talk about a non-bank competitor here for a second, But one of the reasons when you look at Robinhood and Square and PayPal that they don't let you deposit Bitcoin and take Bitcoin off of their platform, they're kind of a closed loop environment, is because of that KYT component. And so it is possible that you allow your customers to buy and sell Bitcoin, for example, but it's a closed loop environment. They can only buy and sell it. They can't transfer it. Right. Business decision, but that's where that know your transaction piece comes in and can be challenging. Not that, there's a lot of tools in the marketplace that help solve for that, but that's certainly one of the ways that we get twisted around the axle here.
Well, and Jay, just to add to your point too, what you just described, it seemed a lot of banks already have the fundamental structure and shell for this. It's a question about being educated and also building up that existing and adding on to that infrastructure, especially in the area of security and BSA and AML, so that they're able to take it. And for example, using cryptocurrency as collateral or custody. Banks lend on, they use a lot of different things as collateral, but this is more of a sophisticated one. There's more nuances and there's more risks involved in it. But at the end of the day, if you can build up that knowledge base, build up that expertise, I think you can, build on what you already have in that area.
And probably, Stan, I think you said it, but I'll rephrase it ever so slightly. The number one thing that the regulators are looking for is, do you actually understand what you're doing? And that seems so foreign, and I shouldn't have to say it, but don't enter the space without really understanding it. Certainly, it's why we do a lot of trainings in this area for our clients, is to make sure that they understand it. But don't tread lightly here.
Yeah, exactly. And that's the same thing when we're dealing with fintech and banking as a service, where I think there are opportunities for banks, either that have the ability to grow it on themselves, but if they're choosing to enter in the space by dealing with a partner, you may not do what that partner is doing, but you better understand it and build up that knowledge base. And be able to explain, to a regulator, for example, there's a lot of fintech ideas that come out and we see them all the time. And one of the fundamental questions we keep asking ourselves, for example, we read a white paper dealing with a cryptocurrency yesterday here in the firm. And we were asking ourselves on the call, what does this mean in plain English? If I can't understand it and I can't explain it to a regulator simply, how can a bank or anybody else understand what they're trying to do here?
Yeah, and one thing that we face a lot, I'd like to get Michael's view on this and experience of, you have to educate up to the top of the organization. So you have to have the directors have some idea of the risk that's involved in kind of the products that the bank is offering. So Michael, how did you educate your board? I mean, I don't think the stereotypical board, and I'm not talking about your board in particular, but a stereotypical bank board is probably of an age and experience where they might not naturally accept a cryptocurrency. Any issues with that? Any hints for people on how to engage a board of directors on this?
Yeah, I think it was helpful for our board, again, given our DNA in the trading community, so they were used to dealing with that community and those needs, and also knew those players when we began talking about that we want to facilitate, this for client X, Y, and Z. And so there's a comfort level with the background, but you needed to get them up to speed with, articles and webinars and other things on what it is, kind of the beginning part of our conversation, so they could wrap their minds around kind of the use case and what are the potential risks and pitfalls. And then making sure that they knew that we were having these conversations with our attorneys and our compliance consultants and then our regulators, that this was socialized in tandem, that we had checked all our boxes and made sure that we accounted for all the different risks. And then lastly, the proving out to them that we had the staffing capability, and that can be a combination between human talent and technology, to handle this. Know your crypto's crypto, know your transaction, all these KYCs and KYTs in addition just to standard ML KYC work. It's not a small amount of it, though. To the regulators' credit, when they come in, we've been through 3 exams now and they've gone very well. There is some learning by doing on both sides, but they know that you're coming from, I guess, an honest place on why you want to do it. And it makes sense that your specific organization on why you're doing it. And you're following, the common sense, I guess, approach to it. Where we find it to be helpful will be, specifically in the state of Illinois, that there'll be actual, written law and rules and regulations. And the marketplace wants regulatory clarity. And the US has been a little bit slow on that. And so the market wants they want to comply. They want the clarity. And from a banker's standpoint, the more that's emphatically written where I know where the hurdles are that we have to clear, and it doesn't change from year to year, the easier it is for us to provide those services. And it makes our directors more comfortable that we're meeting with that obligations. It's not a moving target.
Yeah, and let's touch on that a bit. And we've talked a lot kind of back and forth on this slide that's in front of folks. On the regulatory front, I think, Jay, you brought up earlier in your introduction, the efforts going on in Illinois with regard to a special charter. We have a lot of Illinois banks represented on the phone. I know we've got some from all over the country, but can you give us just a little bit of input on kind of what Illinois has been doing? I think they've had conversations with I know Michael and Stan, they have on some hints on that and ideas of what they're batting around. Maybe some input on where they are in the process and kind of what you are seeing, and hopefully a timeline or when things might get a little more clear on this front.
It's been approved in the House, I believe, and then needs to go over to the Senate. But Representative Croak has put forth the bill for the special purpose charter. The IDFPR is strongly behind it and will be responsible for the rules and regulations. The community banking associations in Illinois have supported it because they think that won't detract from what a bank is able to do. And from my point of view, banks will be first in line. If you're already approved for fiduciary, custodial capabilities, you don't need to go ask for necessary permission. You want to notify them that you're going to go into something. You have to prove out that you have the right program in place to go do it, like you would with any product or service. But I think that there will be, some entities that will want to go after the special trust charter. I happen to think it'll be a great opportunity for collaboration, because a lot of these non-bank companies may want to collaborate with banks and have the bank provide what they do in the kind of the traditional banking as a service model, but for crypto potentially. And, banks are good at compliance and, in providing kind of the standard service that we do. We're not great on the tech side typically. And so there's a lot of opportunity for improvement on a kind of joined effort. But most importantly, I'm excited to see Illinois take a leadership role from a competitive standpoint. Nothing against Wyoming or South Dakota or friends from New York, but Chicago is definitely one of the crypto capitals with all of our great firms here. And so it certainly was driving me crazy that this transaction volume and all the benefits from that could leak out of the state. And so I'm glad to see the state of Illinois stepping forward.
And you talked, Michael, about how tech is a challenge. And I think too, as you think about your core banking platform, and I'm guessing almost everybody on the call has an FIS, a Fiserv, or a Jack Henry, those platforms are not very crypto friendly. Probably the biggest impediment to a bank kind of really incorporating crypto into the products and services that you offer is that that those 3 core platforms, don't support it natively, and I don't think they will in the near future. So, as we think about how this comes to bear, I do think, Michael, the partnerships that you talked about is probably the greatest opportunity for growth, because that tech hurdle, it is the tech companies don't do risk management and KYC AML natively very well, but they do tech really well, and it's the exact opposite on the banking side. So doesn't that make such a great partnership opportunity here?
And this is Stan, I totally agree. And just the one sort of caveat with that, as your bank, if it's going to consider partnering with a tech company, is that to remember that the regulators view any of these partnerships as an extension of the bank itself. And I would also add, not just in a regulatory matter where you're responsible for your partner's activities, but also as a reputational matter as well. So if your bank goes out and wants to pursue one of these partnerships, is to view it with that mindset, that whatever they do is going to be what your bank is going to be attributed to your bank.
It's an important part that, I guess, imprimatur, that working with a regulated institution of bank, that technology company wants that light to shine on them, because they can then say our solution is in tandem with a regulated bank, and it adds that extra layer of, I guess, confidence in that kind of what we often call the bank's association, a center of trust and transparency. And so it is helpful to that. I happen to think that there's value in working to that technology company by working with a bank.
Absolutely. We see that. We've seen that all the time, in the banking as a service model as well, because the fintech, like you said, Michael, will go out and they'll say, hey, we're working with Berling, we're working with X Bank, and that gives them, more legitimacy in the eyes of others.
Yeah.
Well, we're running up against the hour here, and what I'd like to do maybe is just turn and see if, go to the last slide, Ryan, if you can advance it. Not that 5 years ago we wouldn't have guessed we're at, or I wouldn't have guessed we are, or we would be where we are at today. Wanted just your thoughts. Maybe start with Peter. We do have some questions that have come in. They're more on the technical macro side of things, so maybe we'll save those. More questions, feel free to ask them. Maybe we can go a little long with questions and people can drop off if they need to. But, Peter, where are we going to be in a year or 5 years? Is it going to, do you think, continue to advance this way? Is it going to settle down and 6,000 coins are going to become 2? China's going to come in and disrupt everything. Kind of what do you, we won't hold you to it and we'll destroy the recording within 6 months. But what's your gut?
I mean, I think that the amount of coins will hopefully be dwindled down a lot. I think that, as Jay said earlier, like there's really 2, you could argue for maybe 3 or 4 if you're really immersed in the space right now, but there's too many out there. And I think that that's what leads to confusion with everybody. So with regulators stepping in and with just kind of these smaller projects being limited or running out of money, or the industry becoming more legitimate, I expect that there will be less and there will be a lot more of them that have regulated products or are more regulated in the space. And I think that regulators, it's taking them time, but I think that the US is they're slower, but they're doing a good job because they have to protect the investors. They have to protect the people that are getting involved in the space. I think with Canada launching these ETFs, it was a nice kind of segue into potentially what the US will do with some of these regulated products. But I think that banks will also be able to integrate very well with this. Kraken has their crypto bank, and I work for a subsidiary of Kraken, but that doesn't cover your traditional bank responsibilities unless you latch on to Kraken's platform. Everyone wants a full service in their partner, their bank, their wealth manager, whoever it may be. You want everything to fall under one roof. And I think that, more regional community banks are doing a great job of kind of leading the charge or educating. The main thing is education, is people need to be educated and understand what they're getting involved in. Where these crypto native firms, a lot of them are trying to segue into traditional financial services or those entities where, the Kraken Bank is very interesting and it will play a role where it does. But again, for most clients that are here, I would rather have everything under one roof with the same, person that I've trusted for 15 years. So I think that things will move in the right direction. I don't know how fast they'll move, or with China or, Asia's kind of I have clients there, but we don't understand a lot what's going on. But the U.S. I think is moving in the right direction. It is moving at a pace where I think that it's with institutions, large institutions getting into it, each day, that we're moving in the right path. And a lot of the bad actors, I hope in the next 1 to 5 years will be gone.
Yeah, any thoughts from Jay or Michael, how where you see us in will we be having a 5-hour seminar in a year from now on all this stuff? Which we could have
Absolutely.
now, quite honestly, or we could have a 20-hour one if we had the time.
I think banks will be centered to everything in this ecosystem, and they will be the primary on and off ramp. I think there'll be people who do want banks to be disintermediated in this, but that will not be the most common way to work here. So I think one of those slides said that if there's one thing everybody should do today, you don't have to go get into crypto and add that product to your bank, but you really should be learning about it and understanding what it means to be in this space.
The three areas that going forward of custody, conversion, being able to go in and out of crypto to US dollar, and also credit the loan part. I think you'll see that become a more common part of what certain banks are providing, not a lot of them, but will be interesting. I agree with Jay that there'll be a lot of people will be wanting to come through the banking system. It'll be interesting to see what's the customer facing entity. Is it a technology company that has banking as a service effectively in the background where a bank's helping them? Or is it a bank that has crypto technology as a service effectively, something helping the bank become more, I guess, integrated into that? Ideally, you're going to have a seamless front end for the consumer where their crypto environment is seamless to go back and forth their US dollar environment. That may not be that far away. I think you can kind of cobble that together with different things right now, but that'll be something need to be socialized, I think, with the regulators and prove out from a vendor management standpoint that everything's very tight, because if something goes wrong, the finger always gets pointed back at the bank because you're the accountable party within the system and the trusted party. But I do think there's a lot of opportunity for a collaboration.
Yeah, absolutely. Well, I think our time is coming to an end on the open kind of roundtable part. We do have a couple questions, so encourage people to stick around, and panelists, if I can indulge you for a couple more minutes, and maybe address some of the questions that we've gotten. And if participants, if you need to drop off, we will be following up with an email with links to this as a recording. We'll make the slides as they are, we'll make them available. And I would encourage anybody with questions, contact information is on the slides. Encourage you guys to pick up the phone or shoot an email to me or Stan, Jay. And I know Michael and Peter would be happy to answer questions as well. So appreciate everyone's time. And if you can stick around, we'll answer some of these questions and then let everyone get on with their day. So thank you. And maybe turn it, Jay, if you want to chime in. We got a question about cryptocurrencies and the impact that central bank digital currencies may have on that.
Yeah, I mean, if you follow what Chairman Powell's been saying, I think we're looking at a test digital dollar sometime in July. I think we've been talking a lot about China. They're much further along with the digital dollar project. I don't think the question is it going to be impacted? I think it will be impacted, but in the opposite way of most people think, where it will increase the use. Essentially, what it's going to do, my guess is it's going to increase the clearing of ACH and SWIFT type transactions, which will kind of further the use case for a lot of these cryptocurrencies to be used at all. I think it is very disruptive, which is why the Fed is taking so slow of a process to try it and implement it, where China's just jamming it. But I also would look at the Olympics, the next Olympics in China, where the primary way to buy things will be using that Chinese digital dollar, and what exposure they will have. And I think it's going to push the entire world into this digital dollar mentality.
I have to admit, I did not anticipate the Olympics coming up on this call. So
Sorry, I had to,
No,
I
it's
win
great.
I
Shows
win the
how,
$5 bet for adding the Olympics.
and Peter, any thoughts on that from a kind of macro level or anything?
No, I agree. I totally agree with Jay. I think that a lot of people look at it as they're going to be huge competitors with one another, but I think that it'll just solidify that. I mean, it'll help, central banks move money a lot faster than, and people can still, a lot of cryptocurrencies are, they're primarily, their use cases investments. People buy them and they hold them. A lot of people that, financial institutions that have bought Bitcoin, crypto is very expensive to trade from an institutional level. The fees are quite high, which is a big problem, and people don't realize it. Even if you're trading on Coinbase or Kraken, if you're a retail client, it's a couple percentage points in and out. It's expensive. And I think that this will allow, people to invest in cryptos and buy and hold them and create their alternative sleeve of their portfolios, or have something that's, not really tied to your traditional investments or the markets. And banks will be able to transact and move money internally and externally quite fast, which is the goal to kind of change things in the past. But I think that they'll work in tandem, to be honest.
Great. We have one last question dealing with timing of confirming a trade or confirming a transaction. And this, I think, would be based then on using crypto as a, we talked earlier on timing. I think, Jay, you mentioned, or maybe it was Michael, a wire, can take a while to get settled. ACH can take a little bit shorter sometimes, and crypto in a matter of minutes. Does the timing, does the confirmation of a transaction, does that affect and the ability to use it as a payment system? Is Ethereum potentially, is the technology, the blockchain technology behind Ethereum different than Bitcoin and some of the others that might make it move more quickly? Any thoughts that the panel may have on that?
I think we forget when we swipe a credit card at Home Depot that there's a risk calculation in there that a whole bunch of people do as to whether that is ultimately going to get paid back. And so, at the fundamental nature, you can't pay with Bitcoin and have that process in, a half second or whatever Visa and MasterCard transactions are processing now. But what we will see is the fintech and banking ecosystem build products around it that manage that risk, that period of time where that transaction hasn't cleared, much like a whole lot of other banking products. So I'm actually not incredibly bullish that we'll all be going and buying coffee and lumber with Bitcoin anytime soon. But what I am bullish on is that we will facilitate those instant payments using cryptocurrencies, not based upon the blockchain technology, but based on essentially what we'd have is a micro loan, right? A period of time, 5 minutes, 10 minutes, 15 minutes that we're loaning the money to facilitate the transaction.
That's helpful. Thank you. Well, I think that pretty much wraps it up. I thank everyone's time on the panel for taking time out and explaining this to us, and want to thank everyone who participated. And again, don't hesitate to reach out to anyone you see on the screen here for follow-up questions. We'd love to help you. So thank you very much and have a great day.